As always on Markets Tomorrow, we'll talk about pointers which could influence and impact your portfolio. Before I do that, here's a look at some voices and some faces who would be joining us on this edition of Markets Tomorrow. Anup Maheshwari of DSP BlackRock Investment Managers, John Praveen, Chief Investment Officer with Pramerica Mutual Fund, and Prateek Agarwal, again Chief Investment Officer of ASK Investment Managers. Before I bring on board my live market guest, here's a look at market action for the day gone by. On expected lines after last Friday's big rally, Indian markets today consolidated in a narrow and a tight range with some kind of an upward bias. After a flat start, Nifty ambled in and around 5,300 on the upside. Even though markets, the undertone was strong, the leadership was missing. The market breadth, however, of late has exhibited a strong movement. And if you string all market internals together, I guess the direction in the near term appears to be strong, and the fact that one by one all sectors are now equally participating, that to my mind is some kind of a bullish signal. Some more key highlights for the day gone by. Banking stocks, they led the rally. Two-wheeler dispatch numbers were sluggish. IMD monsoon warning had an impact on auto stocks. European markets, they opened higher, and weak Chinese manufacturing data had impact on crude prices. Some gainers and losers now. State Bank of India, HDFC Bank, ACC. We'll look at cement stocks separately, and some large cap losers now. So I would say it was a mixed day for banks, because HDFC Bank touched a new all-time high, but ICICI Bank corrected by about 8.5 rupees. So what's the way forward for Indian markets from these levels, in the near term, in the short term, and in the long term? Let's discuss fundamentals and technicals with our experts, Sandeep Wagle and Nitin Raja. Gentlemen, good evening to you. Thank you for joining us. Sandeep, I would say after last week's strong price action, we had a stable Monday, and that is on expected lines.
Absolutely, Nikunj. We had a stable Monday, and I would say that the market gave a chance to buy. I mean, if it just runs away, you don't get a chance to buy, and you end up buying at the high of the day. That also doesn't make sense. So in that sense, yes, we had a stable Monday, and there was nothing to suggest that we'll have a crackdown or something like that. We may have a 30-40 point correction on the Nifty, which is an opportunity to get into some good stocks with good patterns and play for the next leg of the move.
Nitin Raja, the market mood has changed. What would you attribute this to? Europe, crude, or hopes of some news flow from center?
Well, I think it's a mix of all three, specifically, Nikunj. I think crude has been coming off for some time. Europe news has started being a little more benign, although I don't think we are, we can say with clarity that we're not going to get further bad news coming and so on and so forth. But yes, in the intermittent, news has been benign, and there is this big hope as far as news flow is concerned. So I think it's a mix of all three. Clearly, I think the other thing is that the market is beginning to discount the bad news and is actually reacting to even the slightest of positive news in a more optimistic fashion, which is which kind of shows. So, for example, if you take Tata Motors today, it declared its monthly numbers, which were disappointing. But the stock was barely reacted. It was down about 1% when I last saw it. But it's just manifests that how I think valuations, people are looking at valuations. They are seeing the valuations having kind of bottomed out in some sense, and hence you don't really see them falling as much any longer.
So are you part of the crowd, which is that the current market setup is more like a technical rally and fundamentals are not strong, Nitin?
Well, I think that I'm a part of the crowd which believes that this is in a larger scheme. It's the fifth year in a 8-year cycle, which is a year of consolidation. I think we've probably seen the bottom of the market as such, which is a good sign, because people are more afraid in terms of where they will see the bottom. However, I believe that the fundamentals will take some time to set in play. In the meantime, I continue to believe that the markets will trade in a narrow range. Short-term technical strength probably taking the market to 5.450 levels roundabouts as it. But I think my larger call, at least for the next quarter as we get into the results, it's probably going to be between 5,000 and 5,450.
Sandeep Wagle, for those who are hoping that Nifty in the month of July will touch or cross 5,400, will they get it right or will they get it wrong?
I think they will get it right. 5400 a good chance. 5360 to 5380 is the target I'm looking at. And once beyond that, it could even surpass 5400. Can't say whether it will stop at that. So I think more chances of getting it right than wrong is what I would say.
Sandeep, you're sounding not only bullish, but you're sounding reasonably confident. Why is that?
Well, the chart patterns suggest that, Nikunj. And when you have a breakout after it's like a spring. The market mechanism works like a spring. After you press it, then it just takes off. And I think we have just started taking off. I would explain it that way. And having said that, the upper side is okay. I mean, I'm not that bullish where I talk of 56, 57 and all that. No, I don't see that in this move. I also see a target of 5380, 5390 or 5400. But normally when such kind of targets are met, the prices overshoot the targets, possibly by 1% or 2%. So I wouldn't be surprised if it goes to 54.50 or so as well.
Well, what a difference sometimes 2 weeks can make. 2 weeks ago there were bears everywhere. Now bulls are making a comeback and bulls are making a roaring comeback. It's not a local phenomenon, but it is also a global phenomenon. Check on global volatility, global equity markets, how German bond yields and US bond yields have retreated, and also throw in the element of risk on. The fact that globally fund managers ahead of the EU summit, they were hiding in cash. Now they are revisiting high beta asset markets or high beta asset classes. Let's look at two stocks. First, HDFC Bank, which touched a new lifetime high today, and then the other one is ICICI Bank. Nitin, the chorus on the street is that buy private banks. They offer stability, they offer predictability. But if I dissect that space into two, there is a very stark difference, or there's a very big difference in the way how HDFC Bank is moving or ICICI Bank is moving.
Well, I mean, clearly, if you look at HDFC Bank and you talk to any analyst, his main concern will be with regard to the valuations, which have always been at a premium to all its peer group. That's been the story from last 3 years. Absolutely. The stock is still going up. Absolutely. And so, I mean, the point is that it's a bank which has exhibited and defied all its skeptics in terms of valuations and has continuously delivered top-notch fundamental numbers and continues to be a favorite. And in fact, if anybody talks of private banks in order, people would probably put HDFC Bank right there at the top. So I'm not really surprised with HDFC Bank's performance, as such. And if you really take the banking pack, there are a lot of banks who have actually done extremely well in the recent past. You take an ING Vysya among the mid-tier, they're also quoting, close to its recent highs and so on and so forth. But the point is, HDFC Bank, I think, will continue to remain a favorite of all investors, at least in the near term. As far as ICICI Bank is concerned, I think this is a very interesting story. I think this is a bank which, post a lot of restructuring, has been gradually coming back. I think people are yet waiting for the fact that, it doesn't have the kind of quality book that HDFC boasts of. It doesn't have the same consistency in terms of performance that HDFC has been showing almost continuously for the last many, many years. However, it's a bank which has restructured, it's coming back, but I think a lot of people are waiting for a few more quarters of more consistency before they start, seriously re-rating this bank.
ITC cracked today, and it cracked today after Uttar Pradesh government they increased taxes on tobacco. Check on the intraday graph for ITC. It was one of the biggest loser on the Sensex and on the Nifty. On Friday, ITC touched a new all-time high. So I guess traders were looking for an excuse to sell ITC down, and they got one today. 250 rupees for ITC. Nitin, strategically, how would you time your entry and exit in ITC?
Well, this particular news probably provides you, a entry point, because realistically speaking, UP accounts for, and I was reading a report which was sent out today to me.
About 4%.
About 4% of ITC sales. So it's not really a very big impact. However, what is more worrying is the fact that at the state level, although the center has been consistent in terms of not increasing duties on cigarettes, dramatically in the last 2 years. The states have been actually doing that quite dramatically. Tamil Nadu, did it earlier. You've seen UP do it. So I think the states are using now cigarette as a favorite whipping boy. So that could kind of act as a negative sentiment. But otherwise, I think, among the FMCG pack, probably ITC has the strongest story, both in terms of growth and in valuation terms.
Sandeep, what is your assessment? For those who always wanted an entry point to buy ITC, have they got one today?
Nikunj, as an investor, I would say yes. And if you are willing to see some more lower levels, say to the tune of 2 to 3% or possibly outer side 5%, I think ITC as well as Hind Unilever are good buys. But as a trader, no. I mean, I don't see immediate up move. So if you are willing to take a bet for the next 3 to 6 months and go on buying more, I mean, if it comes lower than 5%, then yes, I think there would be good investment buys or at least position trades, but not definitely short-term trading plays for the next few days.
Lanco appreciated by 5% today, Unitech appreciated by 6%, Suzlon appreciated by about 2%, and HDIL appreciated by about 2.5%. So momentum stocks were in full swing. Within from the momentum space, what are your favorites? You look at some of these stock prices. Lanco 15 rupees, Unitech 23 rupees, HDIL expensive 88, but something like Suzlon 19 rupees. I mean, these stocks are now trading at option levels or option value levels.
Well, Nikunj, I think clearly, if you see the last 1 month, there has been a pattern which has been emerging where stocks which have actually been beaten down dramatically have actually started making a comeback in terms of their prices. I mean, the values of a lot of these stocks, take Suzlon for example, Lanco for example. I'm not a great fan of Lanco, but if you really see the pure valuation at which this company is trading, it really represents for a contrarian investor or a deep value investor a contrarian bet. But so I'm not really surprised, and it's why it's not only the name of stocks that you mentioned. You're probably seeing that happen to BHEL. You're seeing that happen to Crompton today. So all these companies are ripe for some restructuring, and once you have any of this news, like you saw in Crompton today, it's not really surprising to see these stocks really flare up there.
Surprisingly, Sandeep, Tata Motors is not participating in this uptrend. Do you think the spring days for Tata Motors are now behind us, and for a stock which was a must buy on every decline, suddenly the tables have turned? It is more like a sell on uptick stock?
Well, to some extent I would agree with you, Nikunj. If you see the last 3 weeks of movement in Tata Motors, it has refused to go beyond 250. So 220 has become a kind of a bottom, a base, and 250 a strong resistance. I don't see it crossing 250 with ease, and I don't see it breaking 220. So I think it will move in this range. And auto is definitely at this point in time not the flavor of the day or the week. See the other auto stocks as well, except for Maruti, which is outperforming and which is looking good for some more up move. I would agree with you that I don't sense that kind of a upside in any of the auto stocks.
Then what a dichotomy. Logically speaking, the stock on your screen, which is Maruti, that should underperform because there is more competition in passenger car market. Indian consumer or commuter, they have shifted from petrol car to diesel cars, and given the way how currency has cracked, their total royalty payout will only increase. But despite all the concerns I mentioned, Maruti is still outperforming.
Sure. I mean, when you say dichotomy, I mean, are you referring to a comparative to say
Tata Motors? Obviously.
Right. So I think in Tata Motors, I clearly agree that valuations are extremely cheap. But I think Tata Motors is being weighed down by perceptive fears in terms of the slowdown in China, which has also been one of the strong factors for JLR sales. Also the debt overhang. Where they have almost a $600 million plus FCCB coming up for redemption very soon. So I think plus this and the local slowdown in business. So in that sense, yes, there are these larger concerns on Tata Motors which seem to be weighing over the stock and the valuation. Maruti, I think all said and done, is getting the valuation of a market leader. The fact that it's the number one player with a huge market share in excess of 50% is also acting as some sort of support level for the stock not coming off big time.